right, everyone, so finishing the day here in the green, but just barely. I started the day going into the red, and so I'll recap it, of course, in the recap, but just to kind of, in summary, one of the challenges today was that I was not able to exercise the discipline to sit on my hands. And I really should have, because we didn't have a very good gap scanner. If you're watching during the morning show, you noticed that there wasn't any good gapper. I didn't take any trades during the morning show. I took my first trade at 9:40, and I bought a stock squeezing up on the high day momentum scanner, but with low relative volume. It ran into resistance, which I thought was gonna break. I jumped in, it rejected, and I stopped out for a loss. And then I sort of felt like, okay, well now I'm obligated to keep watching the market. I've just taken this loss. So then I'm watching it, and it ends up going back to where I initially got in and going another 40 cents higher. And I got back in and made back what I lost and finished, slightly green. But I just felt like I shouldn't have traded at all, because the relative volume was low. It's the type of stock that can just easily result in unnecessary losses. And I could have finished down quite a bit more than I was at my lowest, if that second trade hadn't worked out. So, I think this is a really important thing to try to keep for myself, in my awareness and presence, is that this is a slow market. So this is not the time to be really aggressive. And if there's nothing that looks good, then the writing's on the wall very early, just to stop and not overstay my welcome. So I'm gonna talk about that more during the recap. I hope you guys enjoy it. I didn't do a recap yesterday. I didn't end up taking any more trades following the morning show. There was nothing really that looked that great, but yesterday was a small green day, as you saw during the morning show. So doing the recap today, I hope you guys enjoy it. Hit the thumbs up as always. And a reminder that my results are not typical, and that trading is risky, and that there's no guarantee for success, whether you're learning from me or you're trading on your own. So please trade carefully, trade in a simulator before you put real money on the line, and I hope you enjoy the recap. Okay, so I'm gonna go over today's trades. By the way, yesterday I didn't do a recap. I actually didn't end up taking any more trades past the morning show. So I sat here until 10:30 or 11, but I didn't take any more trades because nothing really looked that great. Today, I didn't trade during the morning show. I didn't take my first trade until a little bit later in the morning, and the first trade was a loss. The only stock I traded was CYN, and I'm only up $775 on it, but I was down $1,300. So I recovered $2,000 from my lowest in the red to here in the green, which is good. CYN, you'll note, is not on the on the gap scanner. So this morning I started the day, as always, looking at the gap scanner, and I recognized pretty quickly that we didn't have any good looking gappers. So no good looking gappers this morning was a little disappointing, but we're in a colder market, and so some days are going to be slower. And so I said, well, okay, so we've got nothing on the gap scanner, which means I don't have my profit cushion to start the morning from pre-market trades. Disappointing, but next way that I'm going to find stocks is on the high day momentum scanner. But I have to be cautious, because without strong gappers, without strong momentum in the market, we may see stocks pop and drop. And that is what ended up happening. So my first trade was on CYN, and it was on this pretty high volume red candle right here. So it started to squeeze up, as you can see right here, and I jumped in it, and what I was looking for was the break. So this was an extended entry. I'll say that for sure. However, I had this one on watch actually yesterday, and I was looking to see if we would break through 475. So as it was squeezing up this morning, it was coming into that 475 trigger. And since nothing else was looking really good, and this was hitting the high day momentum scanner and had a decent looking chart, I kind of thought, okay, this might be the one that, ends up becoming the stock in focus today. So I jumped in here for the break of 470 with an average of, gosh, what was it? Let me go back. It was 463 average, 464. So I'm in at 464, but it ends up dropping here on this candle to 435. And so I took the loss as it dipped back down. I actually stopped at about 450, the $0.50. So I lost 15 cents or 12 cents. So not terrible, but was down 1,300 on it. It ends up dropping a bit lower and then kind of rallying back up. And on this candle, high volume, it drops and pops up and then pulls back. And I was like, huh, okay, well, it is creeping back up. And I kept watching it. I was waiting to see, okay, well, are we going to break through the pre-market, or the high of day, 470? And it popped and hit 475, but then it dipped down. And then it popped back up and hit 476, but then it dipped down again. And I was like, that's kind of weird, because it's actually breaking and making a new high, but it's not continuing. It's not squeezing. And hang on just 1 second. I'm just going to pause this recording. Hang on. Okay, sorry about that. Okay, so anyways, so we were in this kind of area where we're grinding up. It's moving a little bit higher, and then it pulls back. It hit a high of 79, but there were some sellers stacked up there, and then it pulls back. So I was just sort of like, this is weird. And then I look over, and it broke through 80 and went up to 90. And I was like, okay, all right, here we go. So on this setup here, and I'm going to go to the 10-second chart so we can kind of dial this in. And you can even see right now, this is a bull flag. It's come back. It's shown that it's held, this area, and it's a bull flag. However, the relative volume is low, and that by itself is probably a reason that maybe I shouldn't have traded it at all. The only reason I got in here at 90 was because I was already red on the stock, and I was trying to make back the loss. It really wasn't like the best trade ever. It was a 1-minute micro pullback. It had opened up, but already it had shown me that it was choppy. So in any case, I got in here, and we did get a pop up to 517. I then bought the dip off of 5, and we got a pop back up to 515, and I took my profit. And those were the trades. So that was it. And it got me back the $2,000 that I lost, which was, well, the $1,300 I lost plus that another $700 in profit. So that ended up being fine. But yeah, this one, so I think this kind of goes back to one of the metrics that I know, which is that I don't do as well trading low relative volume stocks. This had low relative volume. Now, I got in it pretty quickly initially because it was squeezing up. So I didn't actually check the relative volume when I first jumped in it. So when I first jumped in it, if I scroll back on the scan way back here, this would have been at what time? It was like 9:40. So around 9:40, let's see, the relative volume on it was only 0.34. Now, I could certainly increase the relative volume parameter on this, and if I did, I would not see some of these stocks. This is on the former Momo stock, the low float scanner. So it already wasn't on one of my preferred ones, but I jumped in it, and that was kind of a quick impulse. I jumped in it. I saw the daily chart, and I was like, yep, I know the stock. I'm going to jump in. I think it's going to become obvious. And if it had picked up, then maybe I would have been early, and it would have ended up having higher relative volume, but that doesn't seem to be happening right now. So unfortunately, this is kind of just one of these ones that I probably should have just left alone completely. Big high volume rejection there. And so, you look at that candle, and the thing is, I bought right into what ended up being resistance. And so you have the combination when I bailed of longs bailing out, because I bailed at pretty much the most obvious spot, the break of the $0.50. So you have the combination of capitulation of longs bailing out plus shorts going short with the stop at the top. So it ends up that you have an imbalance on the sell side. You have that lower candle wick, it flushes down, it goes a little lower, and then it starts to sort of balance and come back up. You got some whip on this candle, and then finally on these candles, you opened up a little bit more with some high volume. So your highest volume is on green candles today, which is good, but that's on the 1-minute chart. The 5-minute is also green, but shows a higher volume rejection candle here. And in any case, this probably should have just been a no trade day. So that's kind of the biggest takeaway, the lesson from today is, why take trades if it's choppy? Because I dug myself a hole of $1,300, and then once I broke the ice, and John was joking, you broke the ice by falling in. I fell in, not in a good way, and then because I was in the red, I felt this kind of like, okay, I've got to. Now I feel like I've got to just stick through to see if I can recover and get back to green. Why do you have that feeling? Why do you feel like you need to get back to green? A lot of traders have it. And I tried to remind myself, listen, it's perfectly okay to be down $1,300 today. Because as far as my daily max loss of 30 grand, 1,300 is like basically a break-even day. Now, I'm up 775. I consider it basically a break-even day, but because it's green, I don't feel bad about it. Break-even when it's slightly red, I feel kind of like, I don't feel as good about it. So, that's something that's important to kind of check that emotion, because the reality is when you're talking about a marathon, one individual, step is meaningless. And this is like the individual step of one tiny little day in a career that has already spanned 10 years, more than 10 years. So one day should never really get you that worked up. It should never really matter. You don't want to empower one day to ruin your career. And you're not going to have one day, like I'm not, the thing is I'm not a YOLO trader. I'm not throwing $10,000 on some GameStop calls and 10,000 on some AMC calls and just kind of letting them ride. That to me is, that's a YOLO strategy. It's a little bit of gambling. And hey, when it works, it feels great, I suppose, but it doesn't really feel that great for me because there's so much uncertainty, and it just feels like a true, it feels like much more of a gamble when you take that approach. And I'm not criticizing that, because I know some people have done well with it, and maybe some people have found some consistency with that, and then in that case it's not gambling. But for me it really would be, because it just feels like a guess. So I don't trade like that. I don't hold whole position trying to get like a 15-20 point move or something crazy. I get in, I take profit, I get back in, I take more profit. That's just the way I trade. I'm a very active trader, and so I'm never going to have a day where I make enough money to retire, in one day. I'm not going to have a $5 million, $10 million winner. I just don't see that happening. And honestly, even if I had a $5 million winner, that's like how much I made in 2020. I'll put up the reminder that my results are not typical as always. But, I don't think anyone would retire because they have, 1 year's salary in the bank. I mean, I don't know. That doesn't even feel like that would really necessarily, like I wouldn't stop if I had a $5 million winning day. I would just be like, that was an awesome day. Okay, now let's come back tomorrow. If I had a $50 million winning day, I don't know. But I'm not going to have that, because I'm not putting $100,000 on, or $200,000 or $1 million on out of the money option contracts that are probably going to expire worthless, but might go up 10,000%. So I'm never going to have a day like that. But at the same time, I also have to be thinking when I'm talking about risk, I have to be thinking about, it's one thing to take a risk and lose $1,000, lose 5,000, lose 30,000. The risk that I take on my trades is all relatively scaled to fairly small, considering where I'm at. I'm not taking $300,000, $400,000, $500,000 of risk, right? I'm certainly not taking $2, $3, $4, $5 million of risk. I'm taking relatively small amounts of risk, and my returns on each day are relatively small compared to my total account size. But I think that this is just the way to trade long term. So, and again, in hindsight, I probably shouldn't have traded at all today, because there wasn't anything that I thought looked great. And then I kind of took a little bit of a quick impulse trade off the high day Momo scanner. I neglected to realize how low the relative volume was, so probably shouldn't have taken that trade, expecting it was going to continue, given no news, just purely technical setup on a day when the market was sort of so soft already. Not really smart. So I jumped in a little too fast. And, then I was able to make it back. It did continue a bit higher, but it just wasn't really that great of a trade. And it's only up 13% on the day. It's really not that interesting of a stock. So that's kind of my recap. Word to the wise lesson: trade less in this market. Less is more. So don't overstay your welcome. It's okay to have no trade days. And, look, I crushed it on Friday last week, $29,000. So those are the type of days that I have to just, if I have 3 days like that in the month, that'd be $100,000. And if I don't trade the remaining 17 trading days, would that be okay? I mean, it wouldn't feel probably that great to sit here doing nothing for 17 days, but at the same time, can you be disciplined and patient enough to wait for those good quality setups to present themselves? And, today was an example where I wasn't. I got a little too, excited and took a trade too quick and dug myself a hole. And then once I broke the ice, I felt like I had to make it back. And so tomorrow I'm going to try to do a little bit better. All right, so that's where I sit here. It's Tuesday. We're about a third of the way through the month. And thanks to a great week last week and a good week the first week of the month, let's see, or wait, was last week was the first week of the month. So I had a great week last week, which was good. I finished April in good shape, but that's April. So anyways, first week of May in the books, and we're working through the second week here, but we're already 7 trading days in, so we've only got about 20 trading days in the month. Looks like we've got 22 this month. So but anyways, well, actually no, I think the market's closed for Memorial Day, so 21. Whatever, doesn't really matter. I'll be back at it first thing tomorrow morning. Those tuning in on YouTube, if you didn't already check out these 2 episodes, there's the top one up here is going to be my simplest strategy for beginner traders, and the second one is on gap trading. So gap trading is definitely my favorite, and I talk about it in both videos. So check those out, and I'll see you guys back here first thing tomorrow morning. All right, see you all in the morning. Reminder as always, trading is risky. My results are not typical, so take it slow.